Okay, Amber, it looks like we are live, large, and in charge, as always, once a week. Hey, how are you doing today?
Yay, I'm good. How are you doing? Hi, guys.
I'm excited. I'm excited about today because you've been talking to me for the last week about the FHA and conventional loan changes that have happened that I'm
Mhm.
excited about for more than just buyers, also sellers. So I
Yeah.
want to give us a chance to kind of walk through that. But before I do so, hello, hello. I am Laci, your Las Vegas gal. This is my amazing loan wizard, the queen of loans, the I don't know, badass bitch friend that I have, and I love her so much. So I can call her that. I'm allowed to say that. It's my channel. But really, really excited. Amber Coleman, one of the top 200 lenders in the nation, who's bringing us all the knowledge, all the awareness of all the great things happening when it comes to buying a home and the loans involved and all the things happening in the world. So, Amber, welcome.
Well, thank you very much. Thanks for having me again. Love being
You
on your channel.
like all those names, like the badass bee
I know.
of this
I was like, woo, my
loan
head's
wizard
getting
of
bigger.
this.
Can you see it?
It's inflating a little bit. So today we're doing this remotely. Obviously, I love being in the room with you, of course, but we're doing it remotely to keep things moving. Lots of stuff coming, lots of stuff going. So we want to stay focused and get the job done. For those of you who are watching today, this is always for you. So when we go live, we want you to know that these live streams are for your benefit. So while we're talking, if you have a question that comes up, drop it like it's hot in the comment box below. Let us know. We'd be happy to answer those questions live, of course, while we're happening. Here, I'm going to let Amber do a lot of the talking today because she is the loan expert. Again, top 200 lenders in the nation, my friends. I only work with the best. This one's the best. So we're going to get started, but let's talk a little bit about what's been happening in the last week. And this announcement has been coming out about these two loan program changes. Kind of happened in the last few weeks. Am I right?
Yeah, they just recently happened this month. So kind of cool stuff. Do you want me to just jump into it?
Yeah, go ahead.
Okay. So the first one's on an FHA loan. So FHA loans in the past, you'd have to be able to like let's say for example, you have family that are moving in with you, right? And you need additional income to qualify, but you don't really want to put the family on the loan with you. So you're buying a house that has what they consider an accessory dwelling unit. So that basically means that there's a living area that has a door to the outside that they can enter their area. And it has a kitchen or a kitchenette and a bathroom in it. So they can live in that part. And when you're buying this house now, you can add additional income to qualifying for the house because there's going to be rents that you could receive for that part. So you can either move family members in there, or if you're moving into a house where you want to be able to have some additional money coming in for to help with your house payment, this accessory dwelling unit where you can add the rents to the loan helps you qualify for a bigger house. Does that make sense, Lacey?
Yeah, so a lot of people when they're calling us, they're typically looking for homes. There's a lot of different types of people homes that people are looking for, but one of the things that a lot of people have been focusing on in the last 5 or 6 years has been having homes that have a casita or that extra,
Yeah.
that extra space that's either attached, they're calling in the next gen units or next generation
Mhm.
units, because there's a lot of families that have been starting to combine their income over the last several years. But I know that when you're going to buy a home like that, sometimes those are a little bit higher priced and they're harder to qualify for when it comes to that. So, how does this affect the FHA loan limits, and what are the loan limits right now?
So the loan limits, it's you're still looking at the same loan limits that we'd always be looking at before. So the loan
Right.
limits this year, 492 and change,
I,
right?
I just
So
took a pause because the loan limits for FHA purchases were like 298 something just a few years ago. Like, it's just
they
crazy
went up
how
fast.
fast it's gone up. Oh my
Yeah.
God.
And I mean, honestly, in December, we always find out what they are going to be for the next year. So what they'll look
Right.
at is how fast the market moved. And then, then we'll see higher loan limits for next year. So for right now, they're 492 and change, but they're going to go higher in January.
So
So,
let's say we were able to find a home for a buyer, a potential buyer who wants to utilize
mhm.
the FHA loan. For those of you who are watching, the FHA loan allows you to do 3.5% down. I know you can change it and do different, but 3.5% down is kind of the biggest selling point of the FHA loan, as well as the rates that you get with it. Am I right, Amber?
So FHA has really good rates. They're 3.5% down, and they just have a lot more flexibility with programs. So, like if
Yeah,
your credit scores are lower, they're not going to bump your rate up because your credit scores are lower. 620 or
right,
above gets the same credit score. So, a lot of times when I'm looking at somebody that might not have perfect credit, their
right.
payment's going to be a lot better than it is going to be on conventional.
Yeah, I know
and their
FHA is
mortgage
probably
insurance
one of
is
the most,
cheaper.
yeah, it's one of the most popular ones as well. Like a lot,
Mhm,
many homes are closed on that. I think firmly, I
mhm,
believe the flexibility with that rate and the correlation to your credit, but also that 3.5% down. And again, guys, you don't have to have 20% down to buy a house, even though everybody thinks you do. So
mhm,
that now paired with the ability to do what you're talking about, where you can utilize, if you buy a home or find a home with an ADU or, the additional dwelling unit that we're talking about. I think it's called
mhm.
accessory dwelling unit or
Yeah,
something. Basically, the extra space that you would use for a college student, or maybe a short-term rental, or a space that you want to rent out, or a mother-in-law suite. That was kind of the thing that they
mhm,
used to call that, the mother-in-law suite. Now they
mhm.
can calculate additional income slash rent to help you qualify for that home in case you're not able to do that. That's amazing.
Yeah, it is amazing. I mean, so there's a lot of houses with casitas that would qualify for this. Some people turn garages into these. Some people
Yeah,
have extra like buildings on the outside of the house for them. So
right.
there's a lot of different ways to do it, but it helps give a little bit more income so that you can get into what you want to get into versus
Yes.
have to, stick with what just your income would qualify for, since this will be more income into your household.
So just to break it down to the most layman's terms possible, so my language that I speak over here. So if I'm a buyer and I have, I'm buying a home that has a space that could be rented out, and I want to qualify, or I can't qualify for whatever reason because I don't quite make enough money, I can now utilize like say my mom's going to move in with me, but I don't want to
Mhm.
put my mom on, I don't want to put my mom on the mortgage or have to get her involved with any of that. So I can now have my mom move in with me. She and I can both now sort of invest in this home together. We can count what her payment for the rental space would be as income towards me, in addition to whatever I make from my job. So she's still involved, she's still helping, but she doesn't have to ding her credit or be on the mortgage. And then it can help you elevate what you're able to qualify for.
Yeah, the only thing
I
is that
say
it
that-
wouldn't be you do have that right, so that's kinda cool, right?
Yeah, that's
Um,
amazing.
the
Wow.
only thing is the appraiser is gonna notate how much that's gonna cost. Like, how
Okay.
much income you're gonna add to it is gonna be deciphered by the appraisal. So we have to get the
Okay.
appraisal involved to
Okay.
say, "Okay, this dwelling unit is worth this much money in rent." And then
Okay, and
that's
they're
what we can
looking
add to
at
the
the area
application.
rentals, right? So they're going to be looking
Yeah.
like they look when they estimate what the home is worth. They're going to be doing that, estimating whatever the homes look like the rental homes or rental units look like they're worth in the area.
Yeah. So kind of like if I look at it in a common sense way, I'm going to look at it maybe it's not a duplex, right?
Right,
But kind of like it. So on a duplex, it's basically two properties, and you could use one of those properties and rent it out to help
right,
offset your other payment. It's similar to that,
right.
only this is in your single family residence house that you
I
could use
love it.
part of the house to offset your payment. So it just
Yeah, and
gives
a lot of
additional options.
no, listen, additional options are great. I know that this is
Mhm.
from a buyer perspective, I think this is a huge impact. I think it's definitely going to bring a lot more opportunity to people who are looking to expand their ability to buy, or want to get help from their parents but don't want them to be on the loan, or whatever that looks like, right? All of that means something different to other people, but I just love that it gives more options. From a seller's perspective, you now have if you're smart and you're looking at selling a home that happens to have a unit like this, or you've converted a garage, I think the rules applying to this are it has to have a separate entrance, correct?
A separate interest, and it's gotta be FHA approved, so which means that it's gonna have to be permitted. So when you're
Okay, so
doing
you
if you're
can't just
gonna
go build a shack in your backyard and call this what it's supposed to be. You have to go
yeah,
through the proper permitting. And actually, I just
yeah,
had a client who bought a house with me several years ago who has been working for a while to get this casita that was already built. When he bought the home, he bought the home cash. It wasn't permitted, or it wasn't done the proper way. It was beautiful, it was well done, but it wasn't permitted through the city. So it took him this long to actually get that done. So do us a favor, do yourself a favor. Don't go build it and then try to get it permitted. Do it the right way. You'll probably do it a lot faster
yeah,
when
it's
it comes to that.
hard.
I love that. So for FHA buyers, when people are calling you, Amber, and talking to you about this program, how are you pitching it to them? Or is this a specific kind of buyer that just has that extra need?
It's a specific buyer that has that extra need, or if like some buyers, like say in Las Vegas, we have this a lot where you're a tip earner, so not all your income
Like I'm
shows
a
on your
waitress or a bartender or whatever, right?
yeah,
Right.
yeah, yeah. So you're not all your income's going to show on your W-2s because you're not claiming everything, right? As a
Right.
tip earner. And
Right.
so, but when I'm talking and having the conversation, I'm asking, okay, who's going to live in this house with you? And
Right.
and so if I'm hearing like, well, my family's going to live in it, so and so is going to live in it with me or whatever, but I can't put them on the loan because they don't have any additional, like they don't have good credit, or they don't have anything
Right.
that show like they get paid
Well,
cash
you
or
don't
something
want
like
to put
that.
them on the loan, right? Yeah. I mean, there's just
Yeah, for
even
one
right,
yeah, for one reason or another, we can't put them on the loan, then I can say, well, maybe if we look for a property like this, we can
right.
add additional income to help you qualify for it, because they're actually going to be paying part of that payment anyway.
Got it.
So
Got it.
so
I
that,
love
that,
it.
that
I love it.
those kind of conversations, we'll just have to talk a little bit more to see what your guys' situation is, who we're moving in the house with you.
All right, so that's the FHA loan. I'm going to pause for a minute and check our questions. For those of you who just tuned in, we're talking about the new FHA loan rules and loan guidelines, some really exciting stuff, giving opportunity for buyers and sellers. And then also, we're going to be talking about conventional home loans and how those have changed and some new things you need to know. I'm going to pause really quick, though. If you guys have any questions, drop it like it's hot in the comment box below. You know, we're here to answer those questions while we're live. Also, be sure if you want to contact me or chat with Amber to learn a little bit more about this, my phone number is scrolling on the bottom. It's actually me who you will speak to, or you can click the link in the description and we'll set up a meeting. So as I'm popping through over here to look at some of the questions we're getting lots of lovelies saying hi, but Matt Smith specifically says, could you get the additional amount to say build an apartment garage?
So there is part of this that you could use for like renovation. So
Mm-hmm.
then we're utilizing some of that for a renovation loan. So we can talk about that, because that's kind of a separate loan, but you could add on that income if you're building on a different type of loan that's still connected to FHA.
And we actually talked about that loan about 2 months ago, I think. We could certainly revisit it, but it's like a rent, to your point, like a home renovation loan that helps you improve the property you're purchasing with the money that you're getting right away. And then,
Yeah.
for your buyers or something that could actually come in, if you would look to sell, they would be looking to use these new guidelines to purchase it from you. But there are different loans, to your point, that'll allow you to upgrade the property once you get into it, which I love.
And I love the way you're thinking outside the box, Matt. Love it.
I love that too. All right, let's see. John Harris. Hello, ladies. New rules? Question mark. Yes, John. Absolutely new rules. Ron the Future says hi, Laci and Amber. Nice to see you,
Hey,
Ron.
Ron.
All right. So again, just want to bring this up. So today we're talking about the Federal Housing Administration. They expanded the access to mortgage financing for homes that have or will include accessory dwelling units. Again, accessory dwelling units, or ADUs, are the casita in your backyard, that garage that has a side unit that's permitted, of course, side unit entry that's separate from the front door that you could maybe rent out. It could be the next generation units that are connected to the homes that aren't quite casitas, that are disconnected. So lots and lots of people are buying those homes right now anyway. So that's what we're talking about in this first part. But Amber, let's move over to the next thing that we wanted to talk about, and that is the conventional loan changes and kind of how that goes.
Yeah, so this is kind of cool too, and it's kind of on the same wavelength. So if you're buying like a 2 to 4 unit property, most of the time, and like a single family unit is, where it's just one property, right? But you can, under the same roof, a
Right.
2 to 4 unit, so you could fit 4 families in a 4 unit house and all have separate entrances, right?
Right.
So those kind of houses, we always used to have to do FHA because conventional required such a large down payment
Mm-hmm.
for the 2 to 4 unit properties for whatever reason. And sometimes on FHA, we'd run into problems like, say, for example, somebody was buying a fourplex, and then they had to have like a non-occupying co-borrower come on and help them qualify for it. Well,
Right.
then FHA would kick them down to putting down 25%.
Right.
Right now, conventional just moved theirs to where you could buy a 2 to 4 plex with only putting down 5%, which
Awesome.
opens you up to the conventional guidelines, and different mortgage insurance. It just gives you more options that aren't as limited to FHA. So basically, how it works is, if you're going to live in one of those units and you're going to rent out the other 2 to 3 units, depending on if you're buying a duplex or a fourplex or a triplex,
Right.
you could get it for the primary residence rate, only put down 5%, and still rent out the other units.
And have your
So
mortgage covered and then some. Right. That's how you
yeah,
really
it's a huge
build.
hack right now that's out in
Yeah.
the industry, to buy a twoplex or a fourplex. So that way, like, I just had a client the other day that has a couple of fourplexes, and their amount that they make well exceeds their rent, their actual mortgage payment on the
Yeah.
house.
Yeah.
Sometimes they just cover the house. It depends on how much rent you can get, what your payment is, but it's definitely a way to work the system so you don't have to pay a house payment if you have renters paying it for you.
Right. No, I mean, that's the thing. That's to your point. Like house hacking is a conversation that comes up all the
Mhm.
time. People are constantly calling saying, I'm thinking about doing the house hacking thing. I'm thinking about doing apartment hacking where I rent several units and just re-rent them out. I mean, everyone's trying to hack the system from
Mhm.
every angle. This is actually a hack that is legally supported, and the lenders are aware of it, and everybody knows about it. So stay within the legal guidelines of what's probably going to be allowed, and then you guys should be better off. I've seen so many people pay in the long run for trying to move around the
I
system in an
know.
illegal way.
That's mhm.
Here in Vegas, we don't have a ton of fourplexes that are just readily available out on the market. That is something that you have to do a little bit of hunting for. Duplex is sort of the same thing. So we've had a couple people kind of reach out to us. So if you're interested in looking, we want to definitely look at what your budget range is, want to understand what you're really looking for and if this hack is what you're trying to do. Because not only are we going to have to look and find the actual units that are going to work for you, we're going to have to look and see what the rent is going to be for each of them, and if it's going to work with all of these things. If all the dominoes need to come into place. But definitely don't try to search for those on your own. It does take a little bit more finesse, if you will, on how to search the city and find the right ones that are going to work for you. And yours truly can help you do that. If you click the link in the description or you call me, we'll certainly set up a time to chat. And then Amber can make sure that it's going to align. Now, Amber,
Yeah.
we've got a lot of people that have kind of started to come on now since we started. If you guys are just joining us, the beginning of this is when we talked about the FHA changes and how accessory dwelling units can now be included as a component of elevating your income to purchase the property, which is awesome. A little house hacking for you. Amber, I've got a couple of people coming in here, and John Harris says, I see there are ADU grant programs. Are you able to speak on any of those right now?
Well, so the ADU programs are coming available on it. So the grant programs, that's a great question. And I'm going to call the grants right after we're off the phone
Okay. You
and
know,
see which programs we can add to that. But
yeah.
I bet we can add some to it.
Well, what's cool, Amber, too, is I think you and I were talking to somebody who focuses on a lot of the grants here in Las Vegas, and we were actually going to have them come on and do an interview with us to
Mhm.
discuss some of those things. So, John, stay tuned. Thank you for your question. For those of you who are watching, stay tuned. Our next live stream, I'm hoping if we can get it scheduled, but in the next week or two, we're hoping to have somebody come on and actually talk about some specific grants. And we're going to be looking to bring more people like that on here so that it's not just me and Amber telling you what we think, that we actually are working with the experts and the real people that do this for a living. And we're not just doing clickbait stuff like so many others. So we're really trying to bring you guys as much as up-to-date information as possible. So really from a perspective of today's topics, I really like the FHA changes the most. Obviously, I love what's going on with conventional. I know you do too. I just know that in Vegas, the struggle is real when it comes to finding those fourplex duplex units. But when you find one, it's gold, it's house hacking gold. But I still think there's the ability to really hack your way into buying a very cool unit that'll not only have amazing resale value later, but they'll also, with like the ADU unit attached to it, or a conversion of a garage or whatever that looks like. But I just love the idea that we're finally able to kind of help those buyers who have been stuck with, my mom wants to help me. We don't want her on the loan. I
Mhm.
can't count her income, but how can I go about doing this? She wants to maybe live with us. Like a lot of people are really trying to still do that multi-generational living experience here in Vegas. And there's a lot of opportunity for that. So now having a loan, the FHA loan, the most favored loan across the planet, but at least the US, having that
Yeah.
loan and being able to apply that with that type of buyer is really exciting.
It is super exciting. One of the things that I wanted to mention on the conventional loan too, though, is one of the things that holds you back from fourplexes, being that we have limited fourplexes in town, is
Yeah.
the price of them. So
Yep.
that's why, like when FHA was the only game in town to buy a fourplex and kind of use that house hacking,
Yep.
you kind of got stopped in your tracks because
Yep.
you have to be within a certain limit to be able to get it. And most of the time, a property that has 4 units in it is going to be well above that unit, right? Or
Yeah.
well above that amount. So conventional offers you a lot higher limits to be able
Yeah.
to get something like that. So yeah, I think both of them just kind of offer a good way for, like you said, that multi-generational how living where multiple people are living in the house, and a
Yeah.
way to help everybody to gain home ownership, even if it's
Yeah.
kind of unconventional.
And now remind me again of the limits for FHA.
So FHA for one unit is 492 and change, but once you add 2, 3, 4 units, you can go higher and higher. I don't have
So
those numbers right in front of me, but I
that's
think,
okay.
but it's quite a bit higher. And then conventional, the same thing. When you add 2, 3, 4 units, it's a
Mhm.
lot higher. So going conventional is going to give you more wiggle room. So
Yeah.
when there's a limited amount of inventory within the fourplex, you're going to be paying higher prices for it.
Yeah.
So now you have more options for that.
Yeah. And so I can remember just a couple years ago when, we both started doing, you were already doing this job, but I joined the ranks of, weirdos that call you every day asking for help. And, as a realtor, I was really excited about that house hacking conversation that we were having even just 8 years ago when we started this, 7, 8 years ago. Yes, it's been that long. Can you believe that? It just hit
I
me.
know, time flies.
Crazy. So back then I was seeing, even at the time, I was seeing fourplexes go for 350, 400, and all the way up. And just this morning I was looking at MLS. I was trying to share the screen, but I don't think it's going to let me. So I'll just tell you what I'm seeing. Right now I'm looking at duplexes are ranging from anywhere from 200,000 to, I would say, 500,000, 450. We've got one threeplex on the market that's active for 500. And then all the fourplexes in the city, which we do have a good amount. They're just not, there's not thousands of them, but we do have a good amount to choose from. Those start at 500, and the top one that I'm seeing being sold right now is 5 million. So it just really depends on area of town, type of unit, et cetera. But the bulk of them are kind of in the $400,000 to $700,000 range. So, as you're looking at your loan options and you're looking at other people, you combining efforts on whether someone else is going to rent a unit or you're looking at the conventional, you now get that 5% down. Whatever thing you're looking at to possibly take advantage of this sort of house hacking conversation, there are options. And that's kind of the price point you need to be looking at for the duplex, fourplex range.
Love it.
Houses with a casita, that's a whole nother ballgame, and they range the gamut. They run the gamut all over the city. So what's the best way for you to find out the information? Oh, I don't know. Reach out directly so we can talk and give you the information. But let's go ahead and look and see what other questions we have. If you guys have questions about what we're talking about, drop it like it's hot in the comment box below. Let me see. Shelly. Hey, Shelly. Good to see you. Can the owner rent the ADU to a non-family? In California, ADUs provide housing solutions for people on a limited budget or income. Can you rent that to non-family and still count that as income?
Yes, you can. So that's the cool thing about it. I mean, we mentioned family, but you can actually, we're going to give you, if you buy a house that has an ADU within it, and you're going to rent it out, we're going to ask the appraiser how much you could receive in rent on that. And that's the amount of income that we're going to add to qualify you for that house.
Good question, Shelly. So it does not have to be family. We used family as an example because that's a lot of the buyers that call us. So we're definitely kind of speaking to those folks who have reached out before. But if you're purchasing a home with a next generation unit or a casita or a permitted converted garage or something to that nature that has a separate entrance, that can be added as potential rental income and will be incorporated in your purchase for your loan, correct?
Correct. Yeah.
So I don't want to pigeonhole it. It does not have to be family. Sorry if we made you think that. We were just using that as an example. That's really awesome. The other thing too is I want to remind everybody. I think one of the top 5 things that people call me about, aside from just moving to Vegas and wanting to be my best friend, of course, I'm just kidding, is asking about Airbnb here in Las Vegas. And so I know that what we're talking about right now, Amber, is going to spark a lot of ideas for, oh, I heard that new FHA thing. That's it. I'm going to do it. I'm going to buy a house and I'm going to rent it out. I'm going to do Airbnb. Not so fast. Airbnb is a very tightly held experience here in Henderson, here in Las Vegas, and here in North Las Vegas. Each city has its own rules that continue to evolve. So if you're thinking about doing it and then immediately are thinking, yep, and I'll just do Airbnb and everything will be great, you're not going to be able to just jump in and do it. You will be more likely better lined up for when they open up applications again for the Airbnb licenses. You do have to be the owner of the home, depending on the jurisdiction that you're applying for that license. So doing this and thinking Airbnb is a great future thought, but you won't be able to just jump in and move in and do Airbnb right away, unless you're just using Airbnb as a vehicle to market 31 or more days rental. So someone who wants to move in for 1 month to a year, someone who wants to be here for 2 months at a time, a traveling nurse, whatever. But you can use Airbnb to market it, but you cannot rent for less than 30 days if you don't have an Airbnb license. And that's something to just keep in mind across the nation, across our nation, Las Vegas, Henderson, North Las Vegas, and Las Vegas. That's a number one misconception. And a lot of people get really down when they call me and I tell them the truth. I want you guys to be able to make money, but I want you to do it legally. I don't want you to be one of the people who are getting $10,000 a day fines for illegally running an Airbnb. However, this is I want to do Airbnb eventually. Let me get in, let me buy the unit. Let me use that potential rental as a means of qualifying. Rent it out if you want in the meantime. But that's when you can put your head down and start to focus on that Airbnb licensing, which is really cool.
Can I ask you a question about the Airbnb?
Sure.
This is just an off the wall question. This is just going through my head. So,
Let's do it.
okay, because I'm just trying to figure out. Okay, so is Airbnb considered the same as like bed and breakfast? So, like, if
Okay.
you're living in part of the house and you're going to just rent out part of the house, that's
Yep.
considered that's the same exact rules.
Same thing. So anything that's a short-term rental is anything less than 30 days is
Hmm.
considered short-term. And the reason there's so many arms up against it in the city is that the hotels don't want you stealing their room nights, right? The hotels are here and they rule the day, just like when
Yeah.
Uber and Lyft tried to come into the city, the taxi commission threw their hands in the air. The same thing is happening when it comes to the hotels. They're concerned that if more and more people are offering their home and a different, less expensive experience, they're going to lose room nights and revenue. So anything under 30 days, you have to have a license. Depending on the jurisdiction, depending on the city, there's a lot of different ups and downs. All of them are different. So good luck. I've done some videos. I'm sure they're even outdated at this point. But with that being said, I love the idea of doing this with a future mindset of I'm going to eventually have a full-fledged Airbnb business where you can churn the butter and take advantage of all the great things happening in the city. But yep, bed and
Yeah.
breakfast, you can call it whatever you want, Miss Marketing, but bed and breakfast is still a short-term rental. So
I
yeah,
just was trying to work the system, okay? But I
I know,
appreciate
girl.
all
Listen, you're
your
hacking the
answers.
system already, all right? We can't be hacking it every
I
angle.
know, I know. But I appreciate all of your research that you put into the Airbnb. Is way to be
I
it.
have an
Way to know it.
I have enough conversations about this on a daily basis that I am not an expert. I don't want to be an expert, but I definitely can speak to it and help you not be an idiot about it, I think. So,
Mhm.
um, let's see. There's grant programs. John said, "What's the best way to pay for an ADU unit?" Let's say, Amber, let's say I'm buying a house and I know that I want to renovate it as I'm purchasing it, to turn something into an ADU unit. Would that other loan that we were talking about play into this?
Like, yeah, you could do a renovation loan on it. You could do a HELOC on it, to be able to gain that access to be able to do that. So yeah,
Amber,
there's a couple
what's
different
a
ways.
HELOC for those in the back? What's a HELOC?
Oh, I'm sorry. A home equity line of credit. So after you buy the house, if you wanted to be able to put improvements into it and you had some equity within the house,
Yeah,
you could do the HELOC, or we could do like a renovation loan to
yeah.
be able to turn it into a place where you had an additional or accessory dwelling unit.
Yes. So I don't know, to your point, that you would be able to do both that loan as well as the FHA. Those aren't going to stack, right? Those two loans don't stack, I'm assuming.
Yeah, you can't do them together. Like if you're purchasing a house, you're going to have to purchase it with the accessory dwelling unit already in place
Right,
for us to utilize that guideline right there,
right.
right? But if you wanted to, after you purchase the house, put like an accessory dwelling unit in the house, then you could access money from a renovation loan or like a home equity line of credit. So
Yeah,
it kind of just depends on, do you already own the house, or
right.
are you looking to purchase a house with this already in it?
Yeah. So there's a lot of ways to slice and dice this. I think the one thing I like working with Amber is that, sorry, I'm going to talk about you like you're not here. I could get rid of you if I
My
wanted.
head's gonna get big again.
Yeah, I know. But I do. The one thing I really love about working with Amber is that she is super creative. So you may call her and say, what I just said. Hi, Amber. I'm really interested in doing Airbnb in Las Vegas. Well, that's great. You won't be able to do it right away, but we can take a look at this new thank goodness FHA or conventional, whoever, whatever, just came out with this new loan guidelines. We could either buy a home that's already got one installed, and then you can get started on the process of being licensed to do that legally. Or we can look at a home that has the space for it or the opportunity or the potential for it, and we'll put you under this kind of loan so that you're able to do it. But I think that this really opens up a lot of opportunity for people who have really been kind of gnawing at on the bread,
Mhm.
waiting for the market to change and for things to come about. And the Airbnb laws have really kind of added a swirl effect. Everybody thinks everything's happening in Vegas, so they want to capitalize on it, but the rules are kind of restricting it. This, I think, really allows you to kind of swim through it in a big way. But yeah, I think a home equity line of credit would be great. I think the ability to buy a home that doesn't need much as far as maybe floors, maybe bathroom, or maybe just an additional exterior door to go to this one wing of the house that would allow you to then be permitted to be eligible for
Mhm.
something later. I think all of those things apply when it comes to being able to take advantage of this. So, you think, Amber?
No, I think, yeah. Well, yeah, I think you had hit it right on the nail. I like went blank for a second, okay?
That's okay. Oh, this is a good one. What's better, a HELOC or a cash out refinance? Matt Smith says. This is a good question for Amber.
That's a great question. So right now, it depends on what your current rate is.
Yeah,
So if you have a super low rate because you refinanced or bought in 21 or 20, then most of the time right now I'm doing a HELOC, or there's even what's called a HE loan where you could, so that's like a fixed loan for the second, or you could do a HELOC. We should probably do something to kind of say the difference
I
between those
love it.
two. So
See,
yeah,
Matt, you're giving us ideas, man. Thank you.
yeah. And then a cash out refinance is, most people are, if they, so here's where I'm doing cash out refinances right now because the rates have gone a lot higher than where people were when they might have bought the house. If they're in some serious credit card debt, and or you just can't afford it and your credit scores have gone down, then I'm doing cash out refinances to get people out of it. But otherwise I'm doing a HELOC right now because it's only a small amount that you're looking to take out for the HELOC versus the whole thing.
Got it.
Does that make sense?
Yeah, really good question. Johnson Rice says, LOL, if you choose a HELOC over cash out refinance, it makes you a HELOCopter. That's cute.
That's
Um,
awesome.
I love it. Weird question from Jonathan. How are squatter laws in Vegas? Kind of related to the 30-day Airbnb rental stuff. Some places it's really, really hard to evict when people won't go or pay. Really good question, Johnson. You know, it's funny. I'm actually
Yeah.
considering doing a video about this because a lot of people, I get so many calls from people who want to do Airbnb, and then I kind of convert their thinking into why don't you get into the house, do long-term, 30 plus day rentals to whoever you think. And then eventually you can move into Airbnb, once you've been here a while. What I'm really the advice, the squatter laws are pretty similar to the rest of the country. You have to have a constable come in and evict, and it's a whole thing. So what we've been telling people who we're trying to convince to still continue to buy and invest in Vegas, but maybe do it with a different mindset or a longer timeline related to being able to launch into an Airbnb experience is if you're going to do a 31 plus day rental, let's say you rent to somebody for 2 weeks or 3 weeks, or even that's more than a month and 2 weeks, or 2 months, 3 months, whatever that looks like. 31 days or more, not a short-term rental. If you're looking to do that, but you don't want to rent to somebody for a full year, I always recommend that you still put them under a lease and you still make them sign a lease agreement and you still take a deposit outside of whatever you would be charging them for the room nights. Because I really do think that that's going to be the only thing that can protect you from the person being able to sit and squat. You're still going to have to go through the normal eviction process if they won't leave, but at least you have the paperwork in place and it's not just an Airbnb purchase on a website. Airbnb is not going to protect you. You have to protect yourself. So it's a big thing that we're telling our clients to do is just make sure you put in place an actual residential lease, even if it's for a month and 2 weeks or 2 months only or 3 months only. Make sure you have a lease in place with an outside deposit that allows you to cover yourself a little bit. Yeah. I hope that
I
answered.
love the questions that come in because I would never even think about that, but that's a great question.
Good question. Here's another really good one from Beach All Day Guy. He says, does the amortization schedule, did I say that right? Amortization.
Yep,
I always say
you
that
said it
wrong.
right.
Does it start over if you refinance?
It does. Yeah. So if you refinance your loan, you're starting over the amortization schedule that
Yeah.
you've already had on the house.
Yep.
So basically you're going to start a
Starting
new
a new
30-year
loan.
fixed.
Yeah.
Yeah, it's a brand new loan. It's a brand new loan.
What is the return from John? What are the return values on buying an ADU unit? Do you know that by chance, Amber?
You know what, I called when this guideline just came out, I called over to an appraiser and said, okay, so how do you give value on these units? And he said it's going to be the same as really anything else. So like when you're going and buying an investment property, the amount of rent that you could receive as far as like what the appraiser says is going to be compared to what other houses are receiving.
Right.
So sometimes what other houses are receiving, maybe they were receiving it a year ago and now prices went up right now. So
Yeah.
it's not gonna, the appraiser is gonna list something on it as far as what they think. But remember, an appraisal is an opinion of value. So what
Yeah.
they think that they can get for rent on it, but you might even be able to get more
Yeah,
because
I
we're
think
looking at the
that's
opinion.
that's a smart way to say it. Is it what they appraisers are pretty conservative typically. They try to they're
Mhm.
the ones that are keeping the housing market from exploding or declining, right? And as
Mhm.
well as obviously the buying and such happening around town. But when it comes to the return on the value for buying an ADU unit, it really depends on what you're also planning to do with it, right? So if you're looking to do the long-term rental, it's going to be a different calculation than if you're looking at that cost of turning over the unit every couple of days and doing an Airbnb style thing once that comes into play. You also have to think about licensing fees and a lot of overhead that comes with marketing and things like that, or furnishing a unit, all the things that you may not think about when it comes to the return. So the return value is going to depend on what your plans are for it, what the going rate is in the area. But what you should know is because like, let's pretend you're doing an Airbnb, or even if you're, or sorry, a short-term rental unit, and you're doing something for less than 30 days, it's going to ebb and flow with what's happening in the city. F1, people are going to pay skyrocketing amounts, right? During January or February when nobody's here, it's going to be much lower. So it's really going to be an ebb and flow, and something that would have to kind of be, reached, evened out over the year. Good
Yeah,
question. Really good
that is
question.
a
Let's
good
see what
question.
else we got. This one says, you're screwed if you refinanced. You do not want to do it. Sometimes it can be a waste. I definitely agree that refinancing right now is a big question, and concern for a lot of people. Like, there's really, unless you have a very, very high rate right now, people are looking at, when they're purchasing, that rates are much higher than they were a couple years ago. So that's also what's holding our market in place a little bit. A lot of people don't want to move into a new home and pay similar or a higher rate than they're paying right now, even though they might need to or want to move. So it's keeping people to staying in their homes a little bit longer. Refinancing is a decision that needs to be made for the right reasons for what you're doing, honestly.
Yeah.
Yeah.
The only reason why I've seen you're right in a way, like most of the time right now, refinancing is not worth it if you have a low rate. But if somebody's gotten themselves into some really high credit card debts and some really high unsecured debts where the rates on those are 29, 30%,
Yeah.
those are the people that I'm seeing refinance, and they're actually saving money right now because of the high payments on the other debts. So there's different reasons for different people. So
That's a
sometimes
really
it's
good
working
point.
right now.
Yeah, that's a
Yeah.
really, really good point. I didn't think about that. Yeah, a lot of people are, they're weighing their options, and thankfully we have people like Amber who are here willing to kind of work through what you have going on and really spell it out so that it's an easy way. Something in my eye. So it's an easy way to see everything across the board and make the best decision. It's
Yeah.
only a waste of money if you're planning to, sell immediately, or if you're going to not save money on the other payments. It's really a personalized decision that Amber can help you with.
Yeah.
All right, let's see. This one says, Matt says, it depends. If you cash out, refinance to save by 5 rental properties that cash flow really well, it actually could be worth it. That's a really good
Yeah.
point. So if you're
See,
cashing out money from one property to buy multiple other properties that are making you money, then a refinance isn't a bad idea, right?
yeah, there's not a one size fits all really to any loan.
Yeah,
So like a refinance for one person is totally not worth it. But if you have other plans to do with that money that are going to make you more money than that interest rate, then it does work for it. Or if you're going to save money from high interest rate things,
right.
it does work. So it's really not a one. And I like the way you think to
Yeah.
refinance to take out for 5 rental properties. So like there's different options for different people.
Yeah, we've also seen people come into town who are looking to buy just one home. They're maybe selling their home in California or Florida or
Mhm.
somewhere, making a good amount of money. They have enough cash to go and buy a home cash here in Vegas, and that brings a lot of to people like a deep breath of sigh of relief. I own it outright. I don't owe anybody any payments. But I've seen you very smartly help people rethink about that and really use that money to invest in a very similar way, taking that full chunk money that they might have from selling a previous home and dividing it up and saying, but if you are able to get a loan on this one, and the payment that you receive on rent pays for that, and it gives you this much extra, you take that and you match it with this one, to where they're still getting, they've paid off home experience, but they also have multiple units working in their favor to make them money. That's real investment. That's how you think like an investor. So Matt's got it right. Totally thinking about it the right way. The best way to do this is to not try to do this yourself and not try to work the math out on your own. Amber's an expert. I'm an expert in our own realms when it comes to looking at what's available, what's possible. So if you're really thinking about moving to Las Vegas, of course we want to talk to you. If you're
Mhm.
thinking about just scratching your head thinking, oh, I never really thought of it like that for investment, or you're holding right now on purchasing, maybe talk to us now, because either way, it's better to talk to us sooner rather than later. But the earlier you talk to us and the more information and ideas that you're having, you share with us, we'll be able to really piece together a game plan and not only get you out of your bad credit situation or help you understand what you can do to expand your income, but truly understand that, this could be the next step towards actual investment. We're not here pounding the pavement saying it's time to buy a house, it's time to buy a house, but we are saying now's the time to buy a house smartly, and now's the time to really look at all the benefits that are coming from the situation that our world is in and see how you can make them work for you and in your favor. Would you agree, Amber?
I would totally agree. I would totally agree. Like it's not the right time for everybody to buy, but it's the right time for some people to buy.
Yeah,
And so
absolutely.
like if you're watching this, like maybe it's time to work a game plan and just see, is it the best to, take some money and put it into different investments? There's always a different game plan and a different light, a different way to look at things. And I think you would agree with me too that we're not here to sell.
Oh,
We're not here to we're here to do what's best for you. So we'll work all kinds of different guidelines, and we'll be straight up and say, hey, maybe we should wait 6 months, or maybe we should wait this time if
Yeah.
it's right for you.
Yeah, we do that all the time every day. So I think that's
Mhm.
what makes us different from other lenders and other realtors in town here or really anywhere is that our interest is in you, our interest is in getting to know you, and our interest is building a relationship so that we can understand your goals and really help you reach them. And then we'll reach our
Yeah.
goal when that time is right. But our goal really at the end of the day is just to connect. So I'm super grateful
Yeah.
that we get to do that every day. A couple
Yeah.
other questions coming through here and then we'll hop off. Let's see. We've got Pollux. Hey, Pollux, good to see you, buddy. What if you have property that you do not market as an Airbnb, but end up staying under those conditions? For example, if you rent a place out for 6 weeks, but the renter just stays there for 3 weeks, you could get yourself into trouble with that. I don't know how they're policing that. If you're not using something to market the home, I don't know how they would know that you're doing it unless you have a nosy neighbor, which some of them look like me and have my haircut and they're
Oh, jeez. Stop.
they go into Karen mode. No, with that being said, though, Pollux, really good question. When you own a home and you don't have rental restrictions within your HOA, homeowners association, you are honestly allowed to do whatever you want. The only thing I would recommend, though, is just being very careful that you aren't doing it often enough to, create a problem and that your neighbors aren't going to be the ones to talk about it. But if you accidentally have somebody planning to stay 6 weeks and they have to go home for an emergency after 3, that's an explainable situation. If that happens every single time, not so much an explainable situation. So it's something that you need to just be careful of. But that's a really good question, actually. I love this.
You always have the smartest viewers, Laci.
Well,
They
it's
have
us,
the
babe, us.
best
We have the
questions.
smartest viewers. Thank you, Johnson. Well, Johnson, I love that handlebar mustache in your photo. It's making me get a little excited over here. Just kidding. What kind of loan is best for us weirdos who want to pay extra every month to try to pay as little interest as possible over the life of the loan? Ooh, can I give this one? Can I answer this one?
Yes.
So basically, to sum that question up, Johnson, again, stoked about that mustache. To sum that up, you're asking, how can you shorten the life of your loan? You're asking about, if I have a 30-year fixed loan and I don't want to pay as much interest as I was quoted I was going to have to pay at the end of that loan, what do I do to pay that loan down faster? So there's a few ways to do it, but the best way that I've seen that's the easy to keep up with is you can do it each month, but I like doing it where you make one additional payment or however many additional payments you can make per year. Write a check or send a check in, one additional or more payments per year to your mortgage company, and make sure in the memo line that you denote that it's principal payment only, so that they are not allowed to apply those funds to anything related to interest. So what that does is your monthly payment is paying interest and principal, but these extra payments are just going to eat away at the balance of the actual loan. So you could, if you did one a year, tell me if I'm wrong, Amber, you could potentially take yours from a 15-year mortgage, or sorry, a 30-year to a 15-year mortgage. Am I right?
Yeah, maybe a little bit more than one a year, but yeah,
Right.
you're right.
But I
You're
mean,
right
like
on
on
that.
average, like if you look at it over the time frame,
Mhm.
the key there is, say you want to apply the payment to principal only. That way it goes above all the interest or below or wherever it lives, and you're eating away at that balance. And then the only thing that's being applied to interest is your agreed upon monthly payments. Are there other ways that you could recommend, Amber?
Well, okay, so to when you said what kind of loan is best for you for us weirdos, it really depends because you're going to want the kind of loan that has the lowest rate, right? So that depends on your specific credit scores and how much you're putting down on the house when you're buying it. But as far as paying your house off as early as possible, so here's something I've been doing recently because I'm all about what you're talking about right there. I'm one of those weirdos. Like I'm all about let's pay that thing off as fast as I can and what's the best way for me to get there. So here's what I've been doing lately. The CDs that you buy at the banks are paying like over 5% in interest to have a CD for 6 to 11 months or something like that. So lately what I'm doing is I'm taking the excess money that I have, I'm putting it away, and then I'm investing it into things like a CD so I can gain money on my money. And then when I'm ready, then I'll put a large sum of money down on the house that's gain interest off of things that I've made it gain interest off of, and then put it in, and just like Laci said, put it down as a principal only payment on it. But as far as saving the money on it, I'm not giving it to the banks anymore
Right.
because then they're making money on my money. I'm actually going to make money on my money by doing interest bearing things with it, like putting into CDs or whatever it is that day. I'm one of the people that's not a risk taker, so that's why I'll go for CDs and stuff like
Mhm.
that. But different markets require different things
Yeah.
to be able to do it. And then you put that big lump sum into into the principal only of the house. Obviously, you don't want them putting in an interest,
Right.
and then you're going to cut down that payment as much as you can.
Yeah, so it's not necessarily the kind of loan. Of course, you want to get the lowest interest rate possible, of course. But I think the real question you're asking is, how, you want to pay little interest, of course, get the best loan you can. But beyond that, these are the ways that we would recommend getting rid of that interest before you have to worry about it. And that's doing these extra primary payment loans, which is really principal payment
Mhm.
loans, which is awesome. Good question. I love that.
Yeah.
I think somebody had asked us a question. Walter said, what deposit is required for a studio in a condo hotel at MGM Signature? So typically when you're purchasing, first of all, you better call me, Walter, if you're looking at buying a condo hotel. Hello. But typically you're looking at, well, what kind of loans are they doing for condo hotels right now?
There's a couple different loans. One of the loans that is being done for condo hotels right now are the DSCR loans, and that is where you don't really have to provide any proof of income employment. It's for investments only, and then they're going to take the rents that can come off that property, and that's what you're going to qualify on because they don't they're not those type of loans will do condo hotels, right? Those deposits are typically around like 25%. Sometimes they can go a little bit more than that, depending on what the rents are on
Right.
the properties. But I would say you're probably averaging a 25% down payment on a condo hotel
Yeah.
for
But
an
they are
investment
doing loans
property.
on them now, which they weren't for a long, long time. So that's
Hmm.
really good. Awesome. I love this.
Hmm.
For Droid 85 says, is this live? Yes, we are live right now, unless you're rewatching this right now. Matt Smith
Hmm.
says, if you wait, say 5 years to pay $20,000 in rent each year, it might be cheaper to buy now. That's a good point. Matt, I like the way you're thinking.
Matt,
Matt, you better come and
yeah,
talk to us in person.
yeah.
Probably try to go for a 10-year loan that most likely would have a lower rate. I don't think a 10-year loan would have a lower rate, would it, Amber?
They do have a little bit lower rates. It just really depends on, not a lot of people do the 10-year loans because the payment is so high. Because remember,
Yeah,
you're paying it off in 10 years versus 30 years.
right.
But you could do a 30-year loan, pay extra on it, and still pay it off in 10 years.
Yeah.
But then if you need to go on a vacation 1 month or something like that, and you need extra money to be able to do that, you're only obligated to the lower payment amount. So the 10-year loan is it's not for everybody because of how high the payment goes.
Love it. Beach All Day Guy says, what are both of your predictions of the inventory over the next 2 quarters? Good question, Beach All
Mhm.
Day Guy. I'm going to let you go. What are your thoughts, Amber?
I mean, to me, over the next 2 quarters, I mean, this is the first time I'm thinking about it, but I can't see much changing over
Yeah.
the next few quarters because the people aren't selling their houses right now because they have low interest rates in those houses and they can't move up. So right now,
Yeah.
it's first time home buyers or people that are buying that people that are moving that have to move, not because
Right.
they want to move. And
Yeah.
that's what's keeping the inventory low. So I think it's going to be much of the same.
Yeah, I think from a resale inventory perspective, more of the same. We are definitely seeing some homes hit the market. It's a nice ebb and flow, but we're nowhere near the inventory that we would like to have in order to make this a little bit more of
Mhm.
a lucrative market and a really more of a seller or more of a buyer's market. It's just kind of right in the middle. New homes, though, on the other hand, are really kind of continuing to build. And so because of that, they're also doing a lot of pretty extreme things like buying rates down and doing all this incentive stuff that doesn't always work out in the way. Like I had a client call me the other day saying that they had spoken to a builder that promised to do XYZ. And then in the end, they didn't do what they said. And so there was just a lot of concern. So first thing to say is don't go to a builder without calling me first. Let us go with you, make sure that we're negotiating. Because if you go without us, you forfeit the right to be represented. So that's number one. But number two, if you do go with us, I'm thinking you're going to be starting to see, I think, a lot more standing inventory options available throughout the new home communities. I think so. I think that we're going to be stalemate a little bit when it goes to when it comes to resale. And I think new homes are going to continue to be more of the inventory that's available until things shift a little bit more. And that's really that's my gut. And that's only I'm thinking that's over the next 2 years, but really it's next 2 quarters. It's probably, to your point, kind of be what it has been. Yeah. You
Mhm.
have to keep in mind, we're walking into the holiday season, Q4 for 2023, which didn't we just do a live stream about like in Q3 talking about 2022? I just feel like we genuinely did 1 year ago. We did a live stream that feels like
We
it was
did.
last month, but we're going into the end of the year. This typically is a time where people slow in terms of their buying. Nobody wants to go shopping in the cold or the winter. Nobody wants to think about moving when they're planning their Christmas, events.
Yeah.
And most people are putting that off until January, February. So like clockwork every single year for the past several years. Amber and I have kind of called it, if you are looking to buy, because things are going to slow down even further, now would be a juicy, crunchy granola time to consider buying, because when everybody else pulls away, there's more deals to be had, more opportunity for you on the market as a buyer. As you move into January, February, March, we've noticed when I first started in this industry 7-8 years ago, I was always told January, February is the worst time. Nobody ever buys houses. It's crazy. It's always super slow. And what I've seen is quite the opposite. I think that our
Mm-hmm.
spring buying starts much earlier than most people think. Most people think spring is March, April, May, and it's, whatever. But our spring typically starts about the middle to end of February. And that's when things start to heat up again. So if you're thinking about it and you're looking at like this next couple of quarters, sooner rather than later to just get in the game is a good idea. And then we can always just time the market based on what you're looking for and what's going to be available. But more negotiability is going to be on the table for sure. That's my 19 cents there for you.
I love your 19 cents. I honestly don't know why people wait to the spring to buy.
I don't
Because
either. It makes no sense.
because
Is that because it's like everybody gets like I don't know, like retail fever or something? I don't know. I don't get it.
maybe, but literally this time of year is when you get the best deals.
Yeah.
Like if you're looking for a deal, if you're looking for closing costs and buy downs or whatever it is that you need, this is the time of year to get it. When spring happens, everybody think about all the people moving from California out here, or wherever out to a place where there's no state taxes,
Yeah.
and it's sunny in February instead of
Yeah.
rainy, right?
I think that's it though. I think people, when it gets nice out, people start thinking, they want to go out, they want to and then house buying becomes kind of a thing, or they want to try to buy in spring because school ends in July, right? June or July. And they think
Yeah.
that they'll be able to move out and get, they're looking to the end of the school year. So we just urge you guys to really think outside the box and go towards go upstream, swim upstream. I'm trying to come up with like a metaphor or an analogy. Swim upstream. When everybody's leaving, you should be going towards it, and then vice versa, because from a house buying perspective, that's how you're going to get the best deals. Also, because you'll work with me and Amber. But other than that, that's why you're going to get the best deals. They wanted to just loop back. JF is clarifying what we talked about when you were talking about the CDs. He said, just to confirm, so put the payment in a CD for 6 months, have it gain interest, then make the extra mortgage payment before the end of the year?
Yeah,
Or does it
because
matter?
then you're gaining extra money on your money just by putting it somewhere, and then you're putting extra down on the house every time you're doing that. So
Principles, but it doesn't have to be within a year or within a time frame. It's within the 30-year, confines of your loan. Am I right?
yeah, so here's how I look at it. Like I'll go 6 months to 6 months or 12 months to 12 months. And if I see that money sitting in there and I know that, okay, I'm doing well on this, so I'll do it for another and then another and then another. And at some point you'll have enough to pay it off or pay it down to what you wanted it, but you're going to get there a lot faster because you're gaining interest on the money that you're saving. Does
Yeah.
that
So
make
it doesn't,
sense?
I mean, it could be $500 you put into a CD. It doesn't have to be a full payment. It's just put money in a CD is what you're saying. Allow it to earn interest, right? And then
Gain
utilize that, cash it out when you're ready to pay towards principal.
Work the system. Work
Yeah.
the system.
Yeah.
Make money
Really good
on your
question.
money.
Really
Yeah.
good questions. Let me answer this one. There's a couple of really good ones. John Harris is confirming, I bought a house in the wintertime. Won't do that again. He's confirming that he won't do that again. Shelly is confirming December is a great time to buy now because builders want the properties off the books. Laci's 200% right regarding representation of you with the builders. So we've got two differing opinions. John doesn't want to buy a house in the winter. It can be tough buying a house in the winter because it's not fun to move around Christmas and when it's cold. But Shelly, on the other hand, is saying she agrees. So it's all up to you guys for sure. But I will say this, Johnson Rice is saying, I've heard some kind of method using a HELOC to pay a mortgage, velocity banking, but I don't know if it's legit. Have you heard of that, Amber?
You know what? I have heard of that. I haven't looked into it a whole lot. It used to be something that people did quite often, but the HELOCs have gotten a little bit more expensive in rates. And I
Yeah.
should look into that again and just see what it's like. Right now, I don't think it's a little bit better because of the rates on them, but
Yeah.
I have heard of it.
Yeah, absolutely. We'll put that on our list of potential subjects to cover. Amber, with all these new ideas, I'm thinking we're going to have to start going live like 3 times a week or something. Can we make that
I
happen?
know. Thanks for giving us all these ideas. I love it.
Awesome. If you've enjoyed watching our live stream, please be sure to like and comment and share it with your friends. And also be sure to subscribe to both me and Amber. We really do enjoy getting your feedback. We want to continue to show up for you guys. We do this for a living. We love this. We're not YouTubers. We're real business entrepreneur people. Not that those aren't, but we are people in the real world working with real people every day. And it's really important to us that you guys know that that's our intention here. So we're not here to create clickbait. linky stuff. We're not here to sell you something that you're not ready to buy. We're here to genuinely connect with you, build a relationship, and help you realize the potential of, putting your money to work here in Vegas. So thank you for always tuning in. Super appreciative of your eyeballs and of your clicks and of your comments. We're going to put probably need to put a whole end of the year schedule together and maybe try to go live a couple more times a week, because there's
I
a lot of really good
know.
ideas just from today's.
Yeah.
If you guys are wondering, how awesome Amber and I are, it's pretty evident, I think. But Amber and I were just talking about the other day how since COVID, she and I started doing these live streams, and these live streams have become like a crystal ball prediction for whatever's to come. And people have started to rely on us to like tell them what's coming. And what I love is, like, we were just kind of thinking back to some of the stuff we've said over the last several years. And every single time we've said, if you do this, this will happen. If you're going to buy now, this is what you're going to get for a deal, has come true. So
It's scary how accurate.
yeah, it's your crystal ball, not mine. I'm just here to look cool. But
Oh, geez, whatever.
we're gonna put together a little compilation to kind of showcase to you guys that, we're here for the right reasons, and we want to make sure that, when we say something that that you need to listen. So stay tuned for that. It's a little bit of behind the scenes, some fun stuff from us coming soon. But other than that, I'm super, super grateful for you guys. I think we should wrap it up, Amber, and just say have a wonderful weekend. It is the Halloween weekend coming up in Vegas, which is usually the most wild weekend of all. What are you dressing up as this year, Amber?
You know what? I haven't decided. I was just thinking about that today. What I better figure it out. Last year you guys were the Scooby-Doo group. What are we
Yes,
doing
they
this
were.
year?
We're doing Where's Waldo this year. Where's Waldo doing our
Oh,
annual trip. I'm going to be in Palm Springs this weekend. If anybody wants to say hi to me, be there with my best friends doing our annual Halloween trip, dressed as Where's Waldo, because
how fun is that?
let's be honest, I don't want to put on a hot wig like I did last year, even though I did look like a pretty awesome Velma, but that's just me. So
Yeah,
anyway,
you rocked the Velma. You
I
guys
do
did
love it.
amazing.
I do look good with dark hair. So anyway, thank you guys for tuning in. We're going to log out now, but if you need anything from us, phone number's on the bottom. Click the link. Let's talk. We'll set up a call. You don't have to be ready to buy. You don't even have to know if you want to invest in Vegas. Just call. We'll talk. We'll get a conversation going. We'll become best friends. It'll be lovely. It'll be good. Happy Halloween, everybody. We'll see you next time. Bye,
Bye,
Amber.
guys.